Before you decide to trade or invest by subscribing to any of our tools, system, methods, posts, or commentary, please read this disclaimer document carefully. Please go to our website visualdecisions.in and read the disclaimer and terms and condition documents available there at the bottom of all pages in footer. GMG toolsets are based on market geometry, moon cycles, WD-GAN, and natural number science. These subjects are being taught by various Indian and international researchers and teachers. I'll advise you to thoroughly understand the underlying concepts by going through their books, teachings, and videos available. We are just the providers of these tools and not the teachers of any of the underlying subject matter. Our objective is to make further research and analysis easier for the people by providing these tools. Chain 8 is an intraday levels and overlap tool. So we'll apply this to the chart. Click on this, close this window, and it is now telling me to select the moving average bar time. So I'll select the current bar, whatever is the current bar. I'll select this bar. Now this is showing me an error which is saying, sorry, please use this tool, an option for 5-minute charts, whereas this is a daily chart. So I'll change the daily chart to 5-minute chart. So now you can see all the levels are being plotted on this tool. So you have to use a 5-minute chart to plot these levels in the chart. So what this tool does, or the indicator does, is plot various levels on the chart. The basic principle behind this tool, or the theory behind this tool, is that the market behaves in a particular pattern every day, and that pattern is the overlapping pattern. I'll show you what do you mean by the overlapping pattern. I'll come into this chart, and for example, this is an upward movement. So this chart is going up and this one is going down. So you can see every day there's an overlap of price. It means the price comes or enters into the territory of the previous bar. So rarely do you see that just this kind of price action takes place unless and until there's a gap up or the gap down. Normally, what price does is it enters into the range of the previous day's bar, like over here, over here, over here. So same with the downward movement. The price will overlap the previous day's price range. Okay, so this is the principle or the theory behind designing this indicator. So number one, this indicator will plot various crucial levels for intraday traders. So it will plot all the high probability intraday entry levels on a 5-minute chart. So what does it do? What are the levels that it will plot? It will plot these levels. PDH here is a previous day high. So today you know where is the previous day, last day's high. PDL over here is the previous day low. ATRH is the average true range high. ATRL is the average true range low. Average true range high and average true range low, these two levels keep on changing during the day as the price moves up and down. So this is telling you where the price is likely to go today at the present moment, where it is likely to form a high or where it is likely to form a low. So the intention behind ATR high and ATR low is that when the price is near ATR high, you avoid buying a stock, and when the price is near the ATR low, you avoid selling a stock, or at the both At both the levels, you can plan to exit the trade if you are already in a profitable trade. So this is the function of ATR high and ATR low. Another thing is PDC, which is the previous day close. This label will show you YVWAP, which is yesterday's VWAP. So two more things that are being plotted on this chart are this yellow orange line, which is VWAP, and this gray line, which is a moving average line. Now coming to the main overlap principle, on the basis of which this indicator has been designed, there are three levels of overlap. Number one is the RL1, number two is the RL2, number three is this RL3. These are the three overlap levels where if the price comes, you can think about buying or selling the market depending upon previous day trends. So the most probable level that one look for is between the RL1 and RL2, because if the price drops to RL3 level, then it is difficult for it to make a comeback. So the high probability level is to do a buy trade between RL1 and RL2. So for an uptrend, we'll be looking to buy between these two levels, and for a downtrend, if you are in a downtrend, you will be looking to sell between these two levels, between RL1 and RL2, with the help of any of the intraday indicator that you are already using or a momentum indicator. These are the high probability turning points. The next plot that is available on this indicator is moving average exhaustion, or MA extreme. So what is this MA extreme? This we can plot with the help of this anchor line, this orange anchor line. Wherever you place this anchor line, normally it is to be placed on the current bar that is happening, but wherever you will place it, it will tell you the likely moving average exhaustion or the extreme limit. So for example, if I hold this anchor line and place it on the last bar of this day, it is telling me that this is the moving average exhaustion limit, and next day you see the price goes to that level and it stalls there only. So we'll do one more thing. For example, we place this on the first bar of the day. So it is telling us that the moving average extreme is over here. Next day also, if you place it here, the next day on this first bar of the day, it is telling you that it is at the exhaustion limit. So price may not go much beyond this level. So what is moving average exhaustion? It is, or the extreme. This is derived from the theory that in last X bars, we are taking here around 150 bars. What was the maximum limit that a price was away from the moving average? It is calculating the maximum limit in last 150 or 200 bars and the distance of price from the moving average. That is the possibility that the price may in future find resistance or support either on the upside or the downside. So moving average extremes are important that way. One important thing to point over here is that the moving average extreme is plotted both way, on upside and on downside. So when you place a bar, this anchor bar on a candle, it will plot the extreme on both sides, that is the upside and the downside. So if I place this candle on this bar, what it will do, it will plot MA extreme on upside and on downside, on the upside here and on the downside here. So it is plotted both way when you place a bar on a candle. I'll discuss one more important feature of the anchor line. So if you are, for example, if you're on a daily chart or a 60-minute chart or some higher time frame chart. So you know that this particular tool will not plot on those time frames. It will plot only on a 5-minute chart. So if you are on a daily chart and your anchor bar is placed somewhere over here, which is around 50, 60, 70 days behind today, so what will happen if you change the time frame to 5 minutes? So what will happen? I'll tell you. I'll click 5 minutes. And now you can see this study is showing an error. The study referenced too many candles in the history. What does this mean? If you get this error, you know that the anchor bar is somewhere very far behind and you have to drag it to the present day. So I'll again convert it to a 60-minute or a daily chart to find the anchor bar. I'll click over here and I can see the anchor bar is somewhere here. I'll hold it and drag it to the present day and change the time frame to 5 minutes again. So now all the levels are plotted and the error is like gone. The last thing to discuss about this tool is yesterday's simple trend band. The band at the bottom of the chart which you are now seeing is the simple trend band. This band simply tells us what was the trend of the previous day. So putting it all together then, how to trade this indicator? The first thing that you'll do is to look at this band. If the band is green, then you look for a buying trade. If this is red, you look for a sell trade. So what are the areas which you are looking at? You are looking at RL1, YVWAP and RL2. Basically these are the areas. So for example, say this band is green. So what you'll do? You will try to look for a buy trade along these levels. The levels are RL1 and RL2 and yesterday's VWAP. That is the way I like to do it. So if the price comes anywhere between these levels and then it turns up again, so with the help of a momentum indicator or some other indicator, I'll get into the buy trade. So this is the way this concept has to be traded. The other thing is, if you are in a buy trade and you see that you are entering an area which is very near the ATR high, you book the profit and get out of the trade. And if you are in a sell trade, and you are going somewhere near this ATR low area, you will exit out of the trade. That is the way things are to be done by using this tool or indicator.